There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processing.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.
Good afternoon, everybody. This is Mark. We're back here for the daily recap. It is Tuesday. As I was saying yesterday in the daily recap, as I was saying Monday morning and today, I think it's business as usual, what we've been doing since the beginning of the year, which is a week and a half, 2 week downward action, a little scary, shallow dip, and it becomes viable. Whoever's buying it, again, the Fed, it doesn't matter. The reality is we basically hit new highs. We didn't close at new highs today. And we're back to, the top end of our trading range, plain and simple, at least in the spiders. IWMs are lagging a little bit, but they had a nice 2-day rally. Qs, same thing. They can't really get above 69.20 with any sort of authority. So we'll have to wait and see, but that's some of the high beta that's still lagging across the board. I've been saying yesterday, I love that some leadership seems to be coming back. The financials had another day green today. Goldman Sachs, I think, basically led the way. Went just about to its 21-day moving average and, found some resistance. And I think that's normal. 3-day move, you would expect some resistance to come into play. Same thing with JP Morgan. Wells Fargo, much of the same. And half the reason is we're obviously JP Morgan and Wells Fargo are coming out with earnings on Friday. So they might just digest over the next 2 days, waiting for the earnings report, and we'll see what happens after that. But overall, this market, again, keeps moving its feet. Today, you could almost say it was the crap, or you could say a little bit, some of these stocks that, quite frankly, commodity stocks that have not moved at all across the board. Cleveland Cliff, I saw that move nicely. FCX. And then some big boys. You had Microsoft, which is a big part of the, overall market. And that was up roughly at one point up about 4%. Went over its 200-day moving average. Decent sign, decent energy. And some of the semis, you had Intel move. Walmart, another move to yearly highs. So you're seeing a broad-based rally, which again creates a healthy environment, creates a market that we want to be in. Albeit, I said it, the trading is not as easy, as simple as it was, where you get the quick moves early on and you get to take your money and wait. Basically, these moves are taking in the entire day. They do wear you out if you don't have the endurance to sit in it and let your trade work. You're going to probably get faked out. And I'll put up the spiders again. And yesterday we put up, a 5-minute chart just to give a little example of how this market is really working. Much of the same today. 12 o'clock, 12:30. Look, we didn't really do anything the morning, a very tight range. And then all of a sudden at 12 o'clock, 1 o'clock, started breaking out. And we obviously, had a nice move to around 233. Sold off a little bit. But again, getting to highs, I don't think that's such a bad thing across the board. Other stocks that were in play that we were talking about, Netflix had a decent day. I'm sorry, that's not a decent day. Hit. It looks like the 8-day, what is that, the 8-day? Hit a key moving average, so, stopped a little bit, and I think it needs to digest. It's just a bottom and pattern, and maybe it's going to wait to earnings. I think that's really what the MO of some of this tape is. Maybe some of these things are just going to wait to earnings. Google, I don't love how it necessarily closed, but I think it's still the bottom and pattern that it's trying to find out. Amazon, much of the same. It did, it's gradually moving off its lows. Apple, and had a little rally, but still nothing to really talk about. And you had a few other ideas out there that I think people were taking advantage of. Obviously, the trade that happened after lunch that I think a lot of people were involved with was FSLR and some of the other solars. Technically it actually looked good, and a pre-announcement to the upside, heavily shorted. I think 36% of the float is short. I'd love to see the solar stay in play for a period of time. Now let's put up the weekly chart because you can't see a whole lot on the daily. This has room, a lot of room. If it really wants to, knowing that 36% of the float is short, understanding that a lot of the, obviously a good amount covered today. I'm sure it's 4 or 5 days of covering that has to happen. Possibly the next move could be, $50 or 40, $45 to $50 could be in the cards. This is the weekly chart, just to get an idea. Huge move today. I wouldn't be surprised to see a digestion over the next 2 or 3 days. Problem with the solars is they really come into play and then they come out of play very quickly. We've not had that sector been in play for a very long time on any consistent basis, so we'll have to wait and see. But either way, from a trading perspective, it was a decent trade across the board, and I think it made some people, some money accordingly. Other things that really were in play, one stock we keep trying to talk about, Nike. It just doesn't seem ready yet, but it's hanging. You just got to be patient. This goes back to my thesis on if you're not patient, if you're just trying to maneuver, you're really going to get yourself, hurt a little bit. I talked about the TBTs, TLTs, possibly getting involved at the low end of the range, which is roughly around 59.60-ish. Had a nice move. I think there's actually another move here to fill the gap. Understanding it's not necessarily a technical play, but it's, the bottom end of its trading range over the last 4 or 5 months, which to me is a good risk versus reward scenario, hence why I was talking about it. Gold also had another, move, but it did hit a key moving average, and I think it's going to be a little resistance. I would expect the 21-day it hit, and it failed a little bit, but we'll have to wait and see. It did have a decent move, off of 150, off of roughly around 1,500 in the price of gold. So, from that perspective, I would wait. Another biotech that had some news, and this is what's happening, guys. You can just see, rotation. I'm talking about. I'm all over the place with the ideas because that's where the market's telling us. SRPT, another stock that came out with some good news on the bio front, and obviously has decent looking chart and really capitalized accordingly. So today, it was the financials, I think. It was a financial day, and we had obviously some selective stocks that I talked about, some of the FSLRs, Netflix, stuff that is trying to find some bottoms, and we'll have to wait and see if that's, if the bottoms are in on some of these plays. Retailers, hit or miss in that category, but Lulu was a standout today. Under Armour's been acting well. Macy's been acting well. In the morning, we knew JCPenney's got hit. Never really rallied and closed just about on its low for the day. Very bearish pattern across the board. Heavily, again, a stock that's heavily shorted that we'll see if it's ever, if it's going to recover to any sort of near term. Right now, you let the technicals sort of dictate what's happening. And that's where we're at. Other individual plays I'm looking at. Yahoo. I talked about some of the healthcare stocks, Humana, Aetna, WellPoint yesterday, and they bounced a little bit. Maybe there's some more upside to it. I think, for Aetna's acting the best right now, but I do think Humana and WellPoint and even UNH is, I think you're going to get a little bit of an upside at some point. But I wouldn't be surprised to see a little bit of digestion over the next day or two, understanding we just had a big travel range. And so I would expect the S&Ps to probably take a break, and some of these other individual stocks we've been talking on, and based on, the technicals you're looking at, to try to really come back to life. And 3 days up, we're getting still two-way action consistently. 1, 2, 3 days up into resistance. It's probably either taking the risk off, which I have done across the board, or you actually go put some shorts on. Same thing on the downside. 3 days down, if a stock didn't rally in this type of tape over the last few days, you might have to wait a little bit. But you gotta, if you are short, you probably have to cover. And certainly if you're looking for long, you look for longs on pullbacks into key moving averages versus just chasing new highs, which is something I don't do, and I'm trying not to do consistently because it's not paying you in this tape. We look good. I love to see the Russell come back into play. I love to see, have another day in there to regain some really composure. Qs still are lagging across the board, but the S&Ps continue to lead. We have leadership back with the banks. Friday could, definitely derail that, but overall things look good, and that's where we're at. High beta is still a hit or miss, but I think as earnings season rolls on, you're going to really see some stuff for us to really do and obviously try to take advantage of. Hopefully you had a good day. There was lots of good ideas in the chat room for the guys that were involved. A good job today, lots of good communication, and I'll see you all tomorrow.